Welcome into America's Retirement Headquarters, home of the Retirement Guys Formula and America's Medicare Associates. Securities offered through Peak Brokerage Services, LLC. Advisory services offered through the Retirement Guys Formula, registered investment advisor. America's Retirement Headquarters, America's Medicare Associates, and the Retirement Guys Formula are separate and independent entities from Peak Brokerage Services, LLC.
We appreciate you joining us today here on America's Retirement Headquarters, home of the Retirement Guys Formula, Retirement Tax Partners, and America's Medicare Associates, Nolan Baker. 419-794-3030 is the phone number. It's 419-794-3030, the website arhq.com. My name is Chris Swan. Today on the show, why 401k investors who have an advisor feel more confident. Do people feel reservations over not doing a Roth conversion? And we'll talk about if you're forced to retire, what to do, all that and more. But before we dive into any of it, let me check in. Nolan, glad to be with you as always. How are you doing today, sir?
Yeah, doing wonderful. Just looking forward to a couple of days to go until the April 15th tax deadline. I know Danny's been working great with a lot of people creating not only their federal and state tax returns through our network of CPAs and enrolled agents, doing these what-if analysis and just trying to take a look at some opportunities on how to help kind of save people some money. I think of one example. Jeff and his wife had come into the office, and when they did their tax returns on some at-home software that they used, they actually had a fairly large federal tax bill that they were worried about. Inherited a house, was trying to figure out what to do with trying to get the house ultimately to their kid, and tax-wise how to navigate that. And by looking at it and looking at what some of the options they were able to do, in fact, it came down to being able to invest into some traditional IRAs for the previous year before the deadline. It turned into owing taxes to getting a refund. So incredible. And I know a lot of people, you're going to hit that tax deadline. Maybe you're going to put your taxes away in the file cabinet and call it a year, maybe not look at them beforehand. But one of the things that we're doing complimentary up until June 1st, before you put your tax returns away, get a hold of our office, talk to Retirement Tax Partners. We can do a what-if analysis and find out what are the things that you could have possibly done to try to save money in taxes last year that you can implement this year. In addition to that, we'll help create a 2025 tax roadmap to show you how to save money on taxes for now and the future. So a little bit of timely tax advice right now.
I know taxes are a pain point for a lot of people out there, and they probably don't want to think about it any more than necessary, but it could benefit them greatly if they take the time to speak with you guys, not just for the year ahead, but the years to come when it comes to taxation. So again, reach out to the team at Retirement Tax Partners, 419-794-3030. Nolan, as always, appreciate you taking time out of your schedule to spend with the listeners. Let's start with this. A lot of people that are saving for retirement, as well as their advisors, they like to compare how those investments did against the S&P 500. Is this a good idea? What advice do you give to investors, to measure performance to see if their portfolio is underperforming?
Performance is, I think, an extremely important topic. In fact, there's going to be 5 ways that we're going to talk to you about how to measure your performance. And if you're feeling like your portfolio is underperforming, those 5 powerful ways are going to be information that you really need to kind of get control of what's happening in this market. So last year, if we look at 2024, we had a pretty successful year overall in the equities markets. And boy, how did things change in a big hurry here with the tariff wars that we have? And literally trillions of dollars just wiped out. And one of the things that I say is, if you utilize some of the technology tools that are out there today, it is a way to make you more of an informed investor, to make better educated decisions. If you want to find out if your portfolio is underperforming and you have saved up a retirement of $250,000 or more, make sure you get a hold of our office. You can click on the link below, see in our descriptions, and schedule a time for the Retirement Team Action Plan, because we'll give you an independent portfolio analysis. And within that independent portfolio analysis, what it's going to do is it's going to show you exactly what your risk level is. It's going to measure that from 0 to 100. So if you're feeling a little bit concerned about the market right now, the first thing is what level of risk are you taking in this example, Chris, compared to the S&P 500 index? So if you're trying to get market level returns, Are you taking market level risk? The other thing that I love about the software and doing the independent portfolio analysis is it gives us the ability to show, like, when the markets go up, how much of the good are you capturing in the good times? And more importantly, when things are bad, like here recently, how much of the negatives are you avoiding? It's called your upside downside capture ratio. And if you don't know what that number is, it's something powerful to know when you're thinking about performance. The other thing that I like about the software is it gives you a GPA score. And with the GPA score, we're thinking of the grades that kids get in, high school and college.
Mm-hmm.
And ultimately what you want to do is you want to try to get the highest possible GPA. So the software, what it's going to do is it's going to say, based upon the construction of your portfolio, are you putting your portfolio in a position to try to achieve the highest potential return for the level of risk that you're willing to take? And, when I think about it, what you want to do is, if you're at retirement time, make sure that your dollars are working and put together as hard as possible. That way you're trying to get the highest potential return, and that GPA score will do it. So if you're thinking that your portfolio is underperforming and you're looking for powerful ways to find out, what I would say, when we're looking at our typical client, they're going to measure success of their performance based upon a couple factors. Number one, security. Number two, they want to look for growth. They want to have reliability. They want to have an investment plan that they understand. Those would be the key characteristics. And, if that feels like you, and if you feel like maybe your current plan isn't measuring up, here are those 5 ways to determine the performance success and ways that you can set up some metrics to look at your portfolio. Number one, you can look at total return. So at the end of the year, a lot of people got their end of the year statement that they had in 2024. And most of the time on your 401k or your investment account, it's going to tell you your performance this year was X, right? Whatever that percentage was. And people oftentimes will look at total return. And if you looked at total return for 2024, you might say, well, that was a pretty good year. You just kind of put the statement aside and forget about it. What I want you to do, though, in this performance exercise is I want you to take it a step further, because we're not in 2024 anymore. We're in 2025. And I think an important exercise to take a look at is when you look at the beginning of the year, say January 1st, when you factor in total return, ask yourself this question: is my portfolio starting off in the green or in the positive? So total return, you can break it down into growth plus income minus fees and expenses equal total return. Now, inside of that, there's a couple of controllable items. So, Chris, can I control what happens on Wall Street?
No.
Right. Yeah. So, we can't have a belief about what we think is going to happen, but at the end of the day, the market's going to do what the market's going to do.
Mm-hmm.
Income and fees and expenses, they're a controllable item, right?
Yeah, I think if you know what you're actually paying, you can take more charge of it, sure.
So 2 very important factors to know when you're considering performance of an account, because the income, meaning by investment selection process, you can purchase things that pay income. You could buy dividend paying stocks, bonds, the fixed income investments, those things pay income. And then fees and expenses, and again, another controllable item by investment selection process. We'll do a lot of portfolio analysis for folks, and what we'll find is that they're not getting very much income and they're paying relatively high fees. And so when you take income minus fees, they're actually in the negative. And so what happens is they're starting off January 1st already in the red. And so you're hoping and praying the one item your advisor or you or nobody on Wall Street can control, and that's the stock market, grows enough to offset starting January 1st in the negative. So we're going to look at your total return when we do that investment policy statement review for you. The number 2 is you want to look at your annualized return over a period of time. I had talked to a newer investor, and this particular newer investor was kind of concerned about what had happened in the market over a 3-month time frame. The challenging thing over a short time frame is market, can go up and markets can go down. When you're looking at a plan, and especially for us dealing with folks that are close to our retirement time, we're trying to look for that consistency. So you're trying to look for, how should this plan perform over an annualized time frame, 3, 5, 10 years. And I think for a lot of our retirees, they want to look at, making those investment decisions based upon, something that they're comfortable with, not maybe having those major ups and downs, which is number 3 on the way to measure your portfolio performance success. And that's looking at it from a risk-adjusted return. In that software that we utilize, again, we can give you your risk score measured from 0 to 100. We can talk to you and tell you what 95% of the time your portfolio ups and downs would be during market environments. We can stress test the plan and determine what is the maximum level of risk that you have in your plan, and make sure that that risk lines up with who you are as an investor. Because if it doesn't, when we have environments like what we're having here with the sell-off in the market, you could be the investor that, allows your emotions to get involved that can hurt your long-term performance. We had met with a lady that had come into the office here recently. She had one of the independent portfolio analysis done. And, what we had found is that back when COVID happened, she wasn't comfortable with what was happening in her portfolio. So she took it out of the stock market. She moved it over into fixed income. And now we know, looking back, that was a very painful decision, because the market, even after the recent volatility, is still substantially higher than after the pullback. Mm-hmm. Number 4 is, when you're looking at performance, you want to figure out what your benchmark is. A common term in our industry is a 60-40 allocation. So, 60% equities, 40% bonds. When you're looking at performance, if you have an allocation that is similar to equities and fixed income, using a benchmark would be a way to do that. And the 5th way to look at it is to look at kind of what is the income generated. We believe that pretty much all roads lead to income for retirees. So if you have predictable income and you get that consistency, the short term of the market just becomes noise. I had done a review recently with a couple that had come in, and when we looked at their plan, they had consistent, predictable income from multiple sources that generated all of the income needs that they have. So whether, their stocks go up or down today or tomorrow doesn't impact what their income is. So looking at performance and looking at the income generated on your plan can be a good way. So again, if you feel that your portfolio is underperforming and you want to know and see how those 5 powerful ways apply to your situation, just make sure you go over to our website at arhq.com. Click on that retirement team action plan. We'll provide you our independent portfolio analysis, so you know your risk score and your GPA score to know how to not only survive in this crazy market environment that we're in, but be in a position to catapult and thrive with some of the opportunities come about.
Here's the thing, and I think a lot of people don't want to talk about it so much, but volatility is always going to be a factor in retirement over the course of the next 20, 30 years. Control what you can control. As we said, it's not necessarily the markets, but how your accounts, your plan is set up to respond to that. That independent portfolio analysis is a great way to get started controlling what you can control. arhq.com is the website, like Nolan said. Set up a time to speak with them there, or give a call, 419-794-3030. A recent survey found that 72% of current retirees wish they had opened a Roth IRA earlier in their careers. They said they missed the tax-free growth and withdrawals. If we want to learn a lesson from that, we can't go back in time, obviously, but if we want to learn a lesson, we talk about the traditional IRA to Roth conversion. When should somebody consider doing a Roth conversion?
This is really an incredible opportunity to take a look at, what's happening in the market in near term, being able to take advantage of some opportunities out there. The market just dropped. Are you doing this to try to save money on taxes? And you had mentioned the, thing about having regrets. I guess whenever I hear that term, I think of the movie Meet the Millers. And that's where the family was taking that
regrets,
trip. And the one guy she met at the campground had the tattoo on his chest of no regrets, spelled wrong.
Yeah.
But we don't want you to have any regrets in this environment right now. So that's why we did the sections previously talking about, if you're terrified of the market, what to do now. We talked about, steps to take to capture opportunities. If you miss those segments on our YouTube channel, you can get all those additional segments that we had talked about as well. But this one is a good one here. Again, the market just dropped. And if you think about it, your retirement account is either your biggest or maybe your second biggest debt that you have in retirement time if you have a mortgage. And the reason being is what has happened is the government taught you to save and invest in a traditional tax deferred vehicle. So a 401k or an IRA. And, hopefully you were a good saver along the way. And by doing that, what you said is you would save money in taxes while you're working because your tax rate would be lower when you retire. Now, Chris, I've been doing this for over 30 years, and I can't think of too many people that have retired that were savers and, successful in their approach that say, I'm going to sit on the porch and watch life just go by. Right? What they do is they're going to travel, right? They're going to go golf. They go boating. They go spend time with their kids and grandkids, and they take those vacations that they've always dreamed about. They're out there doing things. And so what happens in retirement time, taxes are not lower. In addition to that, you have the other issue of now your taxation of Social Security benefits, so you can get a double whammy as well. So when we look at it, one of the things that I want to do is I want to offer you a complimentary 2025 tax what-if analysis. In addition to that, a 2025 tax roadmap. And we're going to do that through our tax firm. It's called Retirement Tax Partners. Danny at our office will coordinate that with our CPAs and enrolled agents. And what we're going to do is we're going to look at 25 different things to do to help try to save money in taxes for you this year and beyond. But here's one that you can take advantage of when the market dropped. We have talked about the topic of Roth conversions quite a bit. And when we look at Roth conversions, we talk about it from a strategic and a tactical perspective. I'll give you one example. We had a couple that came in, took advantage of having our team prepare their federal and state taxes at Retirement Tax Partners. And what we noticed is that they had a large amount of money in stocks saved up in a joint investment account. That's good, right? Good thing. The problem is we noticed that they were not making contributions to a traditional tax deferred retirement account. So year after year after year, their advisor, their CPA, their accountant have the opportunity every year to say, hey, you can move money over and take it from a fully taxable account, move it over into what could be potentially tax-free and all the growth tax-free in the future. And they didn't do it. Missed opportunity. So when we look at your tax return, we're going to look for strategic opportunities. Had another couple that came into the office, good savers. They're in the net effective tax rate of 12%. But they had about $24,000 of additional income that they could convert over at a 12% bracket into a Roth IRA. Now, unfortunately, for a conversion, they missed the deadline for last year because that was December 31st. But the thing is by doing the what if and doing the tax roadmap for this year, we were able to identify the ability to look to pay some taxes now at 12%. By doing so, what they know is they know what their tax rate is today, right? Mm-hmm. And so if the Trump tax cuts do expire, or if tax rates go up in the future, or if they leave the money to their kids or grandkids and their kids and grandkids are in, much higher bracket because they're in their higher income earning years, they could have saved themselves and their family a tremendous amount of money by paying taxes, at a 12% bracket. So if you're not every year getting that conversation about conversions and you're wanting to know, are you missing out? Let's talk. If they're not talking to you about that. The second thing that I talk about is I talk about tactical. So tactical becomes looking at it at specific time frames. We've had a big sell-off in the market here recently because of the concern on tariffs. We'll find out, how long that concern lasts, but short term, whether we're in a correction or whether we're in a bear market, if the market's down 10 or 20%, do you realize that if you do the conversion while your stock or your investment is down, you're going to pay a 10 or 20% less tax because the account value is worth less. And so tactically, if you do the conversion while the market's having the sell-off, you're paying at a lower balance. And then the advantage is if you get it over to the Roth IRA, if and when the market bounces back, or if and when it has the recovery, which time and time again has always shown that quality companies come back in time, all that recovery that you get, has the potential to be tax-free profits for you and your family in the future as well. So this is one of those timely things that if you look at the market environment right now, and, the market just dropped, if you're not having the analysis done on the Roth conversion, I would highly recommend before you put the tax return away and forget about them, you get a hold of our office. If you have more than $250,000 in your retirement account, you could really benefit from that complimentary 2025 tax what-if analysis, and we'll also provide you a tax roadmap to show you, does a strategic and or tactical Roth conversion have a way that the government can help you out? So I know a lot of people maybe, want to push blame at the government, and they want to say, well, the government, caused this crash. But here's an opportunity that in this crash, you can take advantage of the governmental rules regarding taxation to try to help address what could be the biggest debt you have in your retirement, and that's taxes on your IRA. So not only making smart investment decisions, but trying to keep the government away from your money is what we do here at America's Retirement Headquarters.
There are so many people out there who are concerned with the market and the downturns, and sure, that is valid. But as far as taxation, they're negating that, and that could be costly down the line. Having this roadmap done, having this analysis done, make sure you pay as little as possible in taxes in the years to come is a great way to make sure your retirement is as hopefully as beneficial and optimal as possible. Reach out and set up a time to speak with them. 419-794-3030, or going to the website, set up a time there as well. That's arhq.com. The typical American retires far earlier than they expect. In fact, recent research found that the median retirement age is 62. When some of the people were interviewed, they expressed some regrets.
Dear younger self,
don't retire early. When I was 58, I had more than $500,000 saved for retirement. I turned in my retirement paperwork.
Continue working as long as you can.
I just wish I could have worked longer. It really would have helped us.
I lost my job. I was sort of forced into retirement.
The common reasons for retiring early include health issues, job loss, family responsibilities, and thinking that they had enough saved. Do you have a client story, Nolan, where you helped someone retire early without regret, even if that retirement was perhaps thrust upon them?
Yeah, I think this is an area that's important to pay attention to. I mean, we have seen, especially in the governmental sector, right, how many people are being forced to make a decision which could lead them into early retirement.
Right.
I can think of another office that we have from our Florida office, and had a conversation with the advisor down there, was working with somebody who was in the governmental agency, and had that decision. He was really kind of trying to figure it out. He knew that retirement wasn't that far off, but wasn't sure if he was able to do it. So if you're in that situation, you could be forced by the government. I think the recent tariffs have created a significant risk of us actually going into a recession, which is another concern that you see in Wall Street. And if there's, job layoffs, you could be forced into retirement before you wanted to. Your health, you never know when something changes with you or a loved one. And a lot of people get forced into early retirement, before they end up, wanting to get forced into that retirement or make that retirement journey, if you will. So what I'm going to do is I'm going to give you 5 tips if you're in a situation where you're forced to early retirement. Number 1 is, what I want you to do is I want you to take a deep breath and assess your financial situation. You kind of feel a little bit better, right?
Mm-hmm.
I mean, I feel a little bit better. Take a deep breath. Don't make any, quick decisions. I mean, there's sometimes people I've run into that said, you know what? I needed to take all of my money out of my account because I had to pay off my mortgage. I needed to have all this money because I had, trips and other things planned this year, and I'm going to pay off my vehicles, my credit cards, and boom, all of a sudden they wiped out their 401k or take a massive hit to that. And, what they didn't realize is they didn't realize some of the impact that can have on things like their ability for long term. It can impact their health insurance. It can impact, what they pay in taxes at. So number 1, I want you to take a deep breath. I want you to assess your financial situation. And one of the things that we can do in assessing your financial situation is help you create a written retirement income plan. Within that written retirement income plan, maybe you'll be in a situation that retirement is actually possible. The gentleman that I talked about that met with our advisor in our Florida office, when we went through the financial plan, we stress test all the different scenarios that could happen. What if the market continued to crash? What if tax rates went up? What if he lived long? What if inflation was high? What if healthcare costs changed? And when we looked at it, he had a 90+% probability that he actually could retire now.
Wow.
Yeah. So that forced retirement turned into a great opportunity.
Yeah.
And in fact, that great opportunity, came with a little bit of severance money, because oftentimes, just like the government did, they give you a little bit of severance money. So it was able to get him to retire before the beautiful weather gets here. So number two is what you want to do is you want to evaluate what your income sources are. Do you have Social Security as an option? Maybe you should delay Social Security. Can you collect a pension? What's the pension amount going to be? How is it impacted if you draw it before what was your normal retirement age? Maybe you have other sources of income. Maybe you have rental properties. What is the income that's being generated off of your investment accounts? Number three, what you want to do is understand the impact, again, of how that income is going to impact taxes and healthcare costs. So if you're getting affordable healthcare before the age 65, you have to realize that that's an income, not an asset test. If you're taking withdrawals from a traditional tax-deferred retirement account before the age 59 and a half, you could be subject to additional tax penalties. You got to know that stuff before you take those withdrawals and you get hit with a big unexpected tax bill. And then if you've already spent a lot of the money, now you're going back and hitting the count again, creating this snowball effect of terrible things happening. So number four is what you want to do is prioritize needs. I think this might be a time where maybe, you don't add the roof or replace a car. You kind of prioritize what your needs are. And number five is you want to consider new income opportunities. That could be taking the job you've always dreamed of. That could be doing some part-time consulting work. That could be like cruising into retirement time and, allowing you to look at some of the opportunities that are out there. So if you're being forced into retirement, again, it could be an unexpected job loss that you were planning on working for several years. It could be a healthcare issue that maybe you or a loved one that you have, and you're not thinking, do I have enough? Can I make it? Let us put together that retirement team action plan and let us help answer the question to show you if you're not going to keep working, how can you make your money work as hard as possible to not only get you to where you wanted to be in retirement time, but to get you to a point where you feel very confident about the plan that gives you that financial security and peace of mind that know that maybe you have made it, maybe you're in good shape, or if not, what are the steps to get there?
We've spoken so often on the show, through the history of the show, about threats and opportunities. It is a common theme. And the threat of unexpected job loss, early job loss perhaps, could in fact be an opportunity. But you have to know where you stand right now, and that is where the team at America's Retirement Headquarters, having that retirement team action plan done for you, can go a long way to hopefully giving you that confidence. All you need to do, take that first step, reach out, set up that retirement team action plan, 419-794-3030. Once again, 419-794-3030. Or you can always find them online on the website, arhq.com. As always, I want to thank you for joining us here on America's Retirement Headquarters. Hope you have a great week ahead of you. Hope you stay safe out there. Nolan, as always, grateful for the time. Thank you so much. And as we wrap up, I want to leave you with the final word.
Yeah, beautiful weather. So about time to kind of get the car out, start thinking of some good weather to get the classic cars. If you want to join us on our car show, go to arhq.com, click on our events. We'd love to have you out. If you need a little bit of help cruising into retirement time, just think America's Retirement Headquarters. It's home for one location to help you with your entire retirement.
America's Retirement Headquarters is located at 1700 Woodlands Drive in Maumee, Ohio. You can reach them by calling 419-794-3030 or online at americasretirementheadquarters.com. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. Investments can fluctuate and when redeemed may be worth more or less than when originally invested. Nolan Baker is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Please consult with your attorney, accountant, and or tax advisor for advice concerning your particular circumstance. Annuity guarantees rely solely on the financial strength and claims paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Nolan Baker, Ohio Insurance License Number 27787.